We are in an environment right now where we see, uh, you know, names that are beating expectations. Micron beat expectations. We see, lots of movement inside and confirmation that the AI and semiconductor trade is going to continue. But what's interesting about the underlying markets, the underpinnings of the market, is that there are some things that have changed. And one of the very first things that I think that we could make a case for that has something that has changed very dramatically, by the way, is the correlations between the Dow and the Russell and the S&P and the Nasdaq. And there seems to be this trend that's going on right now, and you can see it on the 15-day. It's a 2-week now old event that the Dow and the Russell have a positive correlation with the dollar. The dollar's going straight up. And the Nasdaq and the ES have a negative correlation. And with the dollar going straight up, they are potential weakness events. And this rotation is actually getting stronger. And the concern is right now that it doesn't. And let me get a little bit clearer on that. The concern is that the Dow and the Russell are grinding higher in longs, and the Nasdaq and the ES are in shorts. The concern is that rotation trade fails. And what I mean by that is the rotation trade fails. The longs on the Russell and the YM stop defending. They stop defending, and then everything goes down because there are little pockets of the market that are going up. But if those fail, that would be extremely bad news. And I'm going to go back out here to our leading indicators. And what you'll notice about the dollar is that we're going straight up in extensions of extensions. The euro is going straight down in extensions of extensions. That's bearish for the negative correlations. What are the negative correlations inside of our markets right now? The NASDAQ, the S&P 500, the currencies, the commodities, gold, silver, Bitcoin. And so if the dollar keeps going up here, the indices go down. The next thing to note here is that the ES specifically is unable to even make it up into a halfway back short from highs of the week to lows of the week. And we're so used to buying dips inside of our most recent environment, that it's sometimes hard to kind of put a perspective on, where we are in time and price right now. There's this 96.50 up here. We just dipped into these previous highs up here. But what I like to do sometimes is I'd like to invert the price. And if you were in longs right now, what would you be waiting for? You'd be waiting for a full retracement long from lows, wouldn't you? We can't even make it up or down into those levels. We're just coming into a halfway back long from lows of the week to highs of the week. So we've been in a bit of a no man's land this week. Think about it inversely. You wouldn't even think about buying a pullback until we were at the bottom of this range. And that's where over the last couple of days, there hasn't even really been an opportunity to join a short trend because we haven't even squeezed up into those original resistance levels. So that's something to keep in mind here. When we go back to the leading indicators, bank is going straight up. It has to keep going straight up inside of this setup. That's for the Russell and the small caps and the Dow. The concern is that bank would fail these setups here. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.